The UAE and Saudi Arabia went live with VAT implementation on the 1st of January 2018. The remaining GCC countries are expected to go live on the 1st of January 2019, with the exception of Kuwait, who have recently announced that they will be postponing that. The IMF is currently supporting the remaining GCC countries with their VAT implementation. The underlying economic reasons for VAT implementation across the GCC remain strong. Governments are looking to diversify their sources of income, and VAT is a good way to do this when oil prices continue to fluctuate across the region. Alongside VAT, we've seen the UAE and Saudi Arabia implement excise taxes across fizzy drinks and cigarettes at the end of 2017, and Bahrain also implemented excise taxes in 2017. At the moment, Bahrain has developed a council to look at how can they ensure that the income from VAT also benefits the lowest income Bahraini nationals. And we've seen in Saudi Arabia the implementation of bonus schemes across a number of the public sector employees and other vulnerable sectors of society to ensure that they are not adversely impacted by these taxes. According to research, however, the inflationary impact of VAT is only likely to be 2 to 4%, lower than the 5% levy that's being implemented. So VAT implementation is likely to continue across the GCC states. Therefore, I'm delighted in today's video that we'll be talking to Pierre Arman, Market Development Lead at Thomson Reuters, about his experience in implementing VAT across the GCC and the lessons that can be learnt by other countries who are looking to implement soon. Hi Pierre, can you just introduce yourself and your role at Thomson Reuters for us?
Sure, so I'm the market lead for our tax and accounting division, and I've been spending the past 2 years really dealing a lot with VAT in this region, in the GCC, working with clients in the UAE and Saudi as they've just introduced VAT on the 1st of January this year, and also starting to help other companies as well in the rest of the region.
And you just mentioned UAE and Saudi went live on 1st of January this year. Yeah. Can you share a little bit about where the other GCC countries are in terms of implementation?
Sure. So, as you know, there was a GCC VAT framework agreement back in 2016. So all countries in this region are supposed to introduce VAT between the 1st of January 2018 and 2019. That being said, so far only the UAE and Saudi have gone ahead. The other countries, as far as we know, are all aiming for the end of 2018 or the 1st of January 2019, apart from Kuwait, who have said that they are only aiming for 2021 because they want first to focus on excise tax.
Okay, so as you mentioned, when the original legislation came out, we had anticipated all of the GCC countries would go at the same time, and that hasn't transpired. So what impact has that had on businesses, particularly those with the GCC footprint?
So, I think the first thing is for all of us, both advisors and tech companies, I think it was a blessing in disguise, because having all 6 countries live at the same time would have been impossible to help every single client. So I think having just the UAE and Saudi helped us and companies to be better ready for that. When you have a footprint in this region, I think there was a lot of lesson learned from the UAE and Saudi. Doing your homework and being ready in advance is key. I mean, we had clients where it took them 20 months to be ready for VAT in the UAE. Get your basics right, in the sense that we've seen far too many companies not being able to even produce a basic VAT compliant invoice, which sounds silly, but is key. Right? Because if you do not produce a VAT compliant invoice, your clients cannot recover any VAT on it, and then they're going to be angry. Right? So the other thing is make sure that your staff is trained on VAT, and everybody should be trained, not just finance or not just IT. Everybody should be trained, because as we both know, VAT impacts the entire company, every single function, and certain area like accounts payable, where people are processing invoices again for you as a business who are not VAT compliant, you can be in a lot of trouble for that. Right? So it's really trying to apply these lessons and make sure that for the next countries in the region, you do not do the same mistake as you've done here.
Fantastic. So for countries with a regional footprint, they've got some great lessons learned. Is there anything else that for businesses in the GCC countries that are about to implement VAT that they should be thinking about right now?
I think one of the things is do not use the fact that you don't have the legislation out yet to do nothing. We've seen that exact same trend in the UAE and Saudi, and history has proven that actually VAT still happens, regardless of the timing or how long you have to get ready for it. So start now. There is a lot that you can do without the legislation, trying to work out how VAT will impact you as a business. So that would be really the key advice, is stay up to date on what is happening. Try to see what the UAE and Saudi have done, because the chances are they're not going to try to reinvent the wheel after that. And start today trying to analyze how VAT might impact you, because you will be far ahead of the curve when actually VAT is introduced. Not if, but when.
Fantastic. So the lesson there is be prepared, get started now, the earlier the better, and the likelihood is that this is going to come, so don't avoid it, it's going to impact. Fantastic. Thank you very much, Pierre.
Pleasure.